Markets are completely unwinding today after the CPI report, and then rumors of Fidelity allowing Bitcoin trading are running rampant. So let's take a look at what's going on right now. The markets are down. The Dow's down 1,000 points, 3%. S&P is down 3% at 141, back below 4,000. Technical level there breached, and the NASDAQ down 4.29%, 526 points. So we'll see if this continues to cascade into the close. As I always say, you want to watch the momentum of price action into the close. So what is going on here? Like I said in my video yesterday, if you watched that one, there was no way, I didn't think there was any way inflation was going to come down. I haven't seen anything come down other than gas, really. And gas has come down, but it's still very high historically and putting a lot of pressure on people still. And it's other areas as well. Inflation isn't just about fuel costs anymore. As price increases broaden across the economy, I've been saying that for weeks, if not months, that inflation maybe has peaked, but it's not coming back. It's kind of plateaued for a little while, and it's going to take more time for it to come back because of wage pressure, wage inflation putting pressure on the inflation numbers. Food and commodity prices. Some commodities have come down a little bit, but food, clothing, shelter, all of the things that people need to live day in and day out, none of that is coming down. All of that is going up, and it takes the housing numbers a little bit of time to flow through the inflation numbers. And the numbers that they're using and reading, as we all know, just don't make any sense. We know we've had double-digit inflation. Real inflation at the consumer level has been in the high double digits for a while now. The broadening of inflation, rather than fuel, it was food, shelter, and medical services, the things that people need every single day to live, that drove costs higher in August, slapping a costly tax on those less able to afford it and raising important questions about where inflation goes from here. The core inflation numbers were hot across the board. The breadth of strong price increases from new vehicles to medical care services to rent growth, everything was up strongly, said Mark Zandi, chief economist at Moody's Analytics. That was the most disconcerting aspect of the report. Indeed, new vehicle prices and medical care services both increased 0.8%, probably more than that. Used car prices have settled a little bit and are coming down a little bit, but new car prices are going up. So that has not come back at all. And it doesn't look like it's going to anytime soon. So this is all about the markets, obviously pricing in now more than 90% likelihood that the Fed's going 75 basis points. I mean, that was already a given after Jackson Hole and after the last Fed comments. The Fed's meeting next week. So they're most likely, almost definitely, nothing is guaranteed or for sure going to do 75 basis points. And now the markets are pricing in a 20% chance of 100 basis points. The Fed's not going to do that without telegraphing it. They are in a blackout right now, so you're not going to hear anybody come out and say it, but you might see an article in the Wall Street Journal where 1,000 or 100 basis point rate hike would be telegraphed by the Fed if that's what they're going to do. So right now the market's pricing in 75 basis points, but it's also pricing in, the reason it's so far down today, and we'll take a look at the charts in a minute, is because it's not just the rate hike, but it's the effects of inflation on earnings and the economy that have not been priced in yet, and the real distress that's yet to come from energy prices as we get into the winter months, the fall and the winter months, that are going to continue to rise, as well as other things. So the markets just had, obviously, it's been in a bear market and it's had nice little bear market rallies here over the last couple of weeks. Here's the rumor. Fidelity considering offering crypto trading to brokerage customers. And this rumor came from Mike Novogratz at the SALT conference. He said a bird had told me, a little bird in my ear, that Fidelity is going to shift their retail customers into crypto soon enough. Fidelity is going to shift their retail customers into crypto. So this is somebody speaking at a conference on something that he heard from somebody somewhere about Fidelity making a move to shift their customers. The truth and the reality is Schwab, Citadel Securities, Fidelity, and other Wall Street firms are starting a crypto exchange. So just like Coinbase, just like FTX, just like anything else called EDX Market, it's a crypto exchange because they all have big customer lists and they don't want their customers going to Coinbase, going to Robinhood, going to FTX and these other brokerages. they want to keep customers in-house, so they're starting their own brokerage and teaming up. And this is following the news of BlackRock partnering with Coinbase to offer their customers cryptocurrency products and custody and things like that, in terms of using Coinbase as a fulfillment house for their customers. So this is all about these guys trying to keep their customers in-house versus the rumors that Fidelity was offering Bitcoin trading to their clients. So that's what happens in the space. You got to watch these rumors. You got to make sure that you verify and vet all of this out. And that's why Bitcoin is not bouncing on this news and going to the moon. It's the reality is it's a risk asset. It's risk off right now, especially in light of the inflation report, what the Fed has to do and what the results of this inflation is going to do to the economy as it continues to put pressure on people's savings. Interest rates have gone up, so people cannot refinance their houses and pull equity out. They've already done that for the most part. If we take a look at bonds, the 10-year is continuing to rise, which is driving up interest rates for credit, as well as mortgage rates, which is putting pressure on the housing market, which is starting to correct as well, which we need is a correction in the housing market. That was one of the big inflation drivers today. So the Fed wants housing to correct. They want assets to deflate a little bit. So this is what the Fed wants to see. So this is Bitcoin on the hourly. Big drops on the news. If we look at the daily, I've been watching this trend line as the price was working its way up there yesterday. I was waiting to see if it would hit this trend line and what the reaction would be. That was about 23,000. Didn't make it there, but the last time this trend line was tested, it rejected and dropped all the way down here. And if we take a look at what these percentages are and were, I'm not saying that it's going to do that, but let's just take a look at it. Last time it rejected, it dropped all the way down about 63%. So I'm not saying that that is going to happen, but that's what it did last time. So if it drops 63% from here, where would that put the price? Right around $8,300. Seems not likely, not realistic, but a lot of things are possible. Anything is possible in this environment, given what's going on with inflation, what the Fed has to do, and the repricing that's going on. And then you could end up getting a market accident from Fed policy, meaning credit markets freeze up, tighten, whatever. You could have escalation in Ukraine with Russia getting walloped at this point. They could strike back fiercely with with weapons of mass destruction, things like that, and really escalate things, and stuff could get out of hand quickly. You have other geopolitical threats. So again, it's all about assessing risk. It's not doom and gloom. It's not being negative. It's about, this is the reality of the situation. I've been talking about it since November, December. This is a global macro economic situation that these assets, Bitcoin, crypto, has never existed in before. So it's just a new environment for them, and these are risk assets. It is what it is. That is the bottom line of what these assets are. They're risk assets, and they're going to respond accordingly to risk on, risk off, liquidity cycles, the business cycle. So that's all this is. So it's just a matter of getting to the point to where inflation is tamed, back down to that 2-3%. The Fed can back off and maybe even reverse course, and then we can get back and proceed to another bull market. So you have to manage your risk, protect your capital, so that you can take advantage of the next bull cycle that we're looking at. So let's take a look at the daily averages. Excuse my voice here, still not 100% yet from COVID, but getting there. So here's our daily averages. And the last time we approached this 50, 100-day moving average intersection, again, price dropped that 63%, right back here where the 50 and 100 are coming together again, just like it did back in this area. And if you go back to 2018, same thing happened right here before the final capitulation. So let's take a look at what that drop was from when that intersection happened. And that was a 50% drop. So 50 to 60% has there is some confluence for that. And we'll just have to wait and see if that is possible. I do feel like the bottom is not in. I do not think that the high probability is that the bottom. So I think it's a lower probability that the bottom is in right here at that 17.5 level. I think it's a higher probability that Bitcoin, as well as other risk assets, go to test and break the June lows that were put in. I don't think that's the bottom for any of the markets yet. And as we can see, the Dow is unwinding. Let's get back to our moving averages here. The Dow is now below all of the major daily moving averages, and about ready to test this last low here. NASDAQ is on its way doing the same thing. Here's the S&P back below all of the moving averages, was above the 50 and the 100 for a brief time, dropped back down below. And if we go look at Bitcoin on the weekly, still well below that 200-week moving average, rejected off of it almost perfectly right there. So until Bitcoin can reclaim this 200-week moving average and start finding it as support, all bets are off. This is that 50-100 moving average cross that we've been looking at for a couple of weeks. You go back to 2018, 2019, you can see the bottom was in when that happened, and then price resumed. But again, this was a macro bull market. Right now, we're in a macro bear market, risk off, Fed tightening, liquidity tightening, monetary tightening environment, and fiscal tightening environment. There's still a little bit of stimulus out there, but not a massive amount. So these are the things I'm looking at, and I will see you on the next video.